Ticker symbol ALLE is down over 5% for the past year, and today we'll be looking at a solid industry leader which has a wide moat. This company has been experiencing slow but consistent growth as its net income has grown by over 11% for the past year. But this company has had very consistent margins which have been rising quarter after quarter by small amounts. So today we'll be looking at none other than Allegion, a security solutions provider. In their annual report, they define themselves as a leading provider of security products and solutions that keep people and assets safe and secure in the places where they live in, learn in, and work in. This company offers an extensive and versatile portfolio of security and access control products across a range of market-leading brands, and believe me, they have a lot of brands. We can break their business into different segments, with the three most popular being the following. Starting off with locks, lock sets, and key systems, which represents almost 30% of their total revenues. The products found in this space mainly consist of mechanical and electronic products which are designed for residential, commercial, and institutional use. The second segment is electronic security and access control, which again represents almost 30% of the total revenues, and this consists of wireless locks, biometric systems, and even time attendance and workforce productivity softwares. And last but not least, we have door controls and exit devices, which represents 25% of the total revenues, and these provide door hardware such as closers, panic bars, and other exit devices which are intended for high traffic locations such as schools or even hospitals. These products or solutions, although we don't think of them very often, are essential, and every single location needs one of them. Additionally, this company is what Peter Lynch would refer to as a boring company, where it's in a segment that doesn't have too much innovation, meaning that there are not too many competitors for Allegion to worry about. And additionally, they have many of the world's leading brands in this space, which makes this a super attractive investment. Some of these brands you can see in the screen are Schlage, Von Dupran, Dexter, Isonas, LCN, CISA, Kryptonite, and I could just go on with their over 20 brands in this segment. Now, most of their products specifically in the first segment are a one-off purchase, but those which are more tailored solutions, such as the ones for schools, hospitals, or either those which are wireless locks, offer subscription services, especially because they also offer softwares, which allows companies to secure and track all of their access points and overall improve their security. And who knows that just by selling locks or even smart locks, you could make so much money. This company has a 21% return on capital employed, which is above the 15% threshold that we usually look for. Then they have an interest coverage ratio of 8 times, which is lower than the 10 times threshold that we usually look for, but they have a cash conversion of close to 90%, which is great. Then they have a gross margin of 44% and a net margin which is sitting just above our threshold of 15%. Now, this company is extremely mature. Their top line is not growing by a lot. However, if we look at their bottom line, we can see that it has been improving at a quite consistent pace, not only because of that small top line growth, but because of the net margin has been improving at a very small pace in very consistent incrementals for every single quarter. And this compounds over time, and as we can see over here, the efficiency ratios are also showing improvement all the way from December 2022. Especially that return on invested capital, which is sitting just under 30%. And looking at their balance sheet, we can see that they had a very sharp increase in both assets and liabilities in 2022, but overall they have managed to keep a very sound balance sheet, with their current ratio being very stable as their assets are increasing at a faster pace than their liabilities. Now, this company gets a solid 5.5 out of 8 ticks. Starting with the fact that they have a solid balance sheet as they can pay all of their short-term liabilities only by using their current assets. Now, this company is able to generate very consistent cash flows which are growing organically, mainly due to their slow but consistent margin expansion. Additionally, this company pays a dividend and is even conducting share buybacks in order to reward and increase the value returned to shareholders. And last but not least, we can look at the two most important factors from the slide, which are pricing power and the existing moat. When we talk about pricing power, we generally refer to the ability of increasing your prices at a rate above the rate of inflation without losing customers. And the great part here is that Allegion is not known for providing cheap locks. They're known for providing some of the best quality, most secure locks, which is why companies actually trust their security to them. Because of this, Allegion is able to increase their prices without losing too many customers. There are two main factors which allow this pricing power to exist. The first one is that the cost of these systems is generally extremely low in comparison to other costs that businesses or households are actually facing. But the second one is that you're protecting meaningful data or meaningful people inside of those buildings. So both businesses and households just want to have the best of the best when it comes to this security, because it will be a lot cheaper over the long term to spend a high amount of capital on Allegion's products than to go cheap on some locks and then get all of the data or all of the products stolen. So this allows them to increase their prices over time without losing too many customers, because these customers value security and know that the products are still cheap when it comes to their quality. And when it comes to their existing moat or competitive advantage, this is mainly due to their different brands and different offerings, where all different prospective clients, whenever they're looking for security products or door control access systems and all the services that Allegion is offering, they mainly focus on their brands because they're constantly receiving awards for being the best lock systems in the world, and they have an amazing perceived quality, meaning that it's very hard for a company that has been using Allegion's products for a long time to switch to a different provider. Adding to this company has reached a size where economies of scale are starting to take over. They buy materials in bulk, meaning that they're able to lower down by a lot their different costs of production or administrative costs. This in itself creates some sort of barriers to entry to this whole industry. Now, the two things that I did not quite like is, first of all, the low liability risk. As we saw previously, they only have an 8 times interest coverage ratio when we usually look for companies with that value above 10 times. And additionally, despite their revenue growing by small amounts, I don't think this is enough to classify it as organic revenue growth. I would need to see this top-line growth speed up, or at least watch them develop a strategy to unlock future top-line growth. Having said that, I think this company is an amazing dividend payer, as it has a 1.55% dividend yield with only a 30% payout ratio. This means, on the one hand, that they're able to conduct dividend price hikes without any kind of issue, but secondly, that this is a highly sustainable dividend because it can resist demand shocks. Additionally, we can see that their dividend yield is trading on the high side when we compare it to the dividend yield that has been present for the past 3, 4, or 5 years. And this has to do with the fact that when we look at their valuation, we can see that they're currently trading at below the average price to earnings ratio that they've been trading at for the past 3 years. And when we look at their free cash flow yield, which is of 5.2%, this is way higher than the 3% long-term inflation rate, which deems that this company may actually be undervalued at the moment. Now, when we look at the risk and possible challenges, the main one I see is the worsening competitive landscape. However, it's a very low risk. This company, as I've stated previously, has the best brands in the market, they have economies of scale, and they're developing each year a wider and wider moat, as their brands and their quality is just improving over time. Now, the second risk that I see is the risk for cyclicality or economic downturns, because as we all know, companies and individuals just spend a lot less when it comes to economic downturns. However, it is true, just to challenge my risk here, that whenever there is an economic downturn, there is an increase in theft, which inherently will increase the budget allocated to spending on security solutions, where Allegion could possibly benefit from this. So now, before we move on, please remember that I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that Allegion has a strong competitive advantage, they're generating consistent cash flows, and they have a higher return on capital employed. So I believe that this is a good company and that it could be a good investment, but this is contingent on the fact that their revenue growth has to speed up. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content and I'll see you in the next one.